Welcome back to another video. It is September 21st, 2021. It is Tuesday, and I did call it in my previous video. It was basically a reversal Tuesday. The market was green across the board most of the day. Right now, these are actually the futures. We were green across the board throughout the day, kind of sold off throughout the day, but everything was in the green for the most part. Uranium was green, energy was green, gold miners were green. But like I said, everything kind of cooled off and sold off as the day went on. Emerging markets were green. International stocks were green. Dividend stocks were green. Here's a glimpse at the gold stocks. They were kind of mixed, but GDX was slightly in the green. This chart shows a pretty good example. It was up, almost 2% at one point before just kind of giving back all the gains. But currently, futures are in the green going into Wednesday. It looks pretty good. Crude oil still above $70 a barrel. Silver pushing. Whoa. That is a huge jump in the futures market. I just now noticed that. Not sure what that's all about, but that's a good sign. Gold also got rejected at 1782 and pretty healthy above 1775. I think that's an important level that gold needs to hold. Crypto was getting pretty slammed today. It looks like it's pushing higher now as well. That's interesting. Bouncing clean off of 40. Now let's get into the portfolio. AMC and GME both red on the day. Absolutely getting crushed. If you watched my previous video, I had these call options in my account. I had about a $12,000 position, and it was just a weekly lotto ticket, and I went huge into it. If I would have kept this position, I would be down probably around $6,000, but I did sell it into the morning when AMC rallied. Unfortunately, I didn't sell all of it at the highest price. I sold half of it, and then as it pulled back, I just got rid of the rest of it. I didn't feel too good about it. And then I did sell a covered call against my 1,000 shares. I sold a call that expires this Friday with a $44 strike price. I did get paid $900 for this, and I'm currently up $490 because AMC just continued to sell off, and the momentum just kind of gave up. AMC did bounce off of 37-ish area where it did have strong support, so it was nice to see AMC bounce off that support line. I do think there's some downside risk in AMC. I know that there is a significant amount of support around 32, and if we do get down to those levels, I will be backing up the truck. I'll be buying monthly or a few week out call options, as well as selling some puts at that price as well to collect some premium. We will see. Obviously, I'll lose a bunch of money on the way down because I have 1,000 shares. For every $1 AMC goes down, that's a $1,000 loss that I have. Currently down 3.1K on this position since opening it. As you can see, my trade price is $50. This was a short put where I got assigned 1,000 shares of AMC at $50 per share while collecting $8,750 in premium. Factoring out the premium I collected and the amount that the stock has dropped, it puts me at a $3,100 loss. So my trade price really is around $41 and some change. Remember, this is not financial advice. I'm not a financial advisor, and I need to say that before I forget. I'm just posting my investing journey for entertainment purposes and some educational as well. I did open up this new position that I would like to mention before wrapping up the video. It is CCJ. This is uranium. This has pulled back about 20% from its high of about $26 per share. Uranium has been cooling off after having an explosive parabolic move to the upside. And I like the $20 region. I think CCJ can cool off. And so I sold puts with a $20 strike price. These puts here expire September 24th, which is this Friday. I got paid, let's see, I think it was $1,900 in premium. Currently down $50 on this trade. So as long as CCJ is above $20 per share by this Friday, this will expire worthless, and I would have collected the entire $1,900 in premium. Again, whenever you sell a put and it goes below your strike price, you get assigned shares. 100 shares per one contract, and in this case, it would be a boatload. That would be 10,000 shares of CCJ at $20 per share, and that would definitely be on margin. I am a margin trader. I use leverage, and I take risk that way. Also, my previous video, I'll quickly go ahead and mention this while I'm still talking. I had NUG-T calls and JNUG calls, both very profitable in the day. $760 and $830 respectively. So had a pretty decent day. I was in the green, recovered a lot of losses from yesterday. That bloody Monday. It was like as close as a black Monday that in this environment as I can think of. But this should be an interesting week. Jerome Powell is speaking tomorrow, and it will be very interesting to what he has to say. If he talks about tapering, it'll probably make the market go red, the dollar go higher, and the precious metals sell off. If they do attempt to taper, I think they're going to fail miserably. They're going to reverse course and print even more money and send everything back to the moon and the dollar coming down. They're going to sacrifice the dollar, in my opinion, to save the market. I hope everybody had a great time or listening to this. Please like, subscribe, and leave a comment. Thank you. Bye.